Well, howdy there, folks, and welcome into today's video. Hope you guys are doing great out there as always. Today we're getting into 5 stocks. Yes, 5 stocks that I think are going to be easy money stocks over the next 5 years. We're going to talk about what makes it an easy money stock. We're going to talk about each of these 5 stocks. I'll go into detail a little bit. We'll talk about maybe a couple minutes on each of these stocks and kind of why I think these stocks are easy money stocks. Okay, and there's going to be one particular stock that's not mentioned in this list that I know I'm going to get a lot of questions about. I'll address that at the end on why that particular stock, and I know there will be even other stocks that people ask, well, why isn't this stock not in the list and things like that. So we'll address that at the end of the video. Okay, now when I call it an easy money stock, what does that mean? That is essentially a stock that I feel over the next 5 years has an extremely low probability of, if we fast forward 5 years in advance, a very extreme low probability that I lost money on that stock. An extremely high probability I 2X'd or more than 2X'd my money. And I'll kind of even talk about price ranges. I think a lot of these stocks will be 5 years from now. Okay. And so that's what it means to be an easy money stock. It can't be, if there's a high risk, if it's a high risk, high reward stock, it honestly can't be in this list. Okay. Because if it's high risk, like there's also a high probability, that stock could not work out and things like that. Okay, so all I ask in return for this video here today is that you guys smash that thumbs up button. You absolutely obliterate it. I appreciate that in a huge way. Lets me know you guys enjoy a video like this where I talk about a bunch of individual stocks that I think are really good stocks for the next 5 years and things like that. I appreciate you guys. Much love as always. And feel free to share this video out with a friend or family member if they're into that. As always, I'm not a financial advisor. I'm not your financial advisor and all that other good stuff. But I'm always flipping flapjacks left and right out there, guys. So let's get into this. The first stock of these 5 stocks up here that is an easy money stock is Amazon. This one had to make the list. Okay, there's no way I could make a list like this and not put this one in. Okay, Amazon. Think about this for a moment, okay? It's trading at a forward P of 54, which is actually quite a bit higher than most stocks on this list, okay? But for Amazon, that's actually fairly low when you take a few things into account, right? Amazon's online business, think about it over the next 5 years. It's going to grow exponentially, right? If we go back 5 years ago, I might have ordered a couple things a month from Amazon, right? Now it's like a couple things a week. 5 years from now, it'd probably be a couple things a day, right? Like they just continue to make progress. They just continue to get more and more relevancy. They continue to try to get delivery times faster and faster. Don't be surprised that 5 years from now, don't be surprised if within a year or two, but never mind 5 years from now, Amazon's got it where they get delivery to you within hours, okay? Maybe even sooner than that. You look at the progress Amazon makes and how fast they make it. It's incredible. It doesn't matter if I'm out here in Arizona at the Arizona house or if I'm at Vegas in the Vegas house, man. In every community I go to, Amazon trucks just flying around. 5 years ago, there was no such thing as an Amazon Prime truck. Now they got their own fleet of trucks out there. They got their own basically huge, massive delivery company and logistics company. They got their own fleet of planes and everything. It's amazing. So think where this company's going to be in 5 years. That's just the e-commerce side, okay? The advertising side of their business is growing exponentially right now, which is an extremely profitable business model. Ask Facebook, ask Google about the advertising business, okay? That is one of the most profitable business models you'll ever have, is the advertising business model, okay? And Amazon continues to grow that business exponentially. Think about Amazon Web Services for a moment. If you have any sort of business that is trying to scale or anything like that, it's hard not to use Amazon Web Services, especially if you are starting to reach tiers of like mid-tier business or mid-sized business, okay? Never mind a big business. Amazon Web Services is almost a must-have. And from everybody I speak to, it's almost a must-have if you have a mid-sized or a large business, okay? And then you think about all the various businesses this company owns, from Whole Foods to Twitch. You just go on and on and on. And it is almost impossible not to imagine this company. In my opinion, if we're going to fast forward 5 years in advance, 5 years from today, 5 years from recording this video, I believe Amazon stock will be priced anywhere from about $6,000 a share on the low end to potentially about $11,000 a share on the high end. That's assuming the stock never splits or anything like that, and Jeff Bezos and co, they decide to just keep Amazon stock just growing, okay? So like I said, $6,000 on the low end in 5 years from now, $11,000 on the high end, okay? That's my personal opinion. It could even do better than that. Doing worse than that, I don't see it as being realistic because their revenue growth is just going to be too darn strong over the next 5 years. Government regulation around Amazon, that could be potentially a threat over time as they get bigger and bigger. The government trying to look at them and say, oh, are you guys a monopoly? That's obviously a threat, but at the end of the day, I've just found time and time again, the government doesn't really get too far with that because they don't want to go down that route. You know why they don't want to go down that route? Unless they have some super hard evidence, because it's a slippery slope. And if you're going to go after Amazon, then all of a sudden you have to go after the FB. And if you're going to go after the FB, you have to go after Google McDougal. And if you go after Google McDougal, you have to go after App. And it's just, you get into the slippery slope situation and it starts to get ugly really, really fast, okay? So yeah, that's the first stock of these 5 stocks that I feel is an easy money stock. Let's get into the second stock of these 5 stocks that I feel is an easy money stock over the next 5 years. And it is Walgreens Boots Alliance, ticker symbol WBA. All these companies are different sizes. Some of these market caps are going to be hundreds of billions of dollars or $1 trillion plus in Amazon's case. This one's a little under a $50 billion market cap. When I look at WBA stock, Walgreens Boots Alliance, it feels like a very easy money stock for me. This is why this is one I'm personally invested in, by the way. The reason being, I look at this company, first off, they're in the pharmacy game, right? They got a huge turnaround going on. They're getting likely a huge ramp up in business that we're going to see over the next several quarters because of those Rona shots, right? And so that's made Walgreens kind of more relevant, honestly, than it's been any time in recent history, because all of a sudden everybody's like, oh, I got to get a shot. Where do I go get a shot? Walgreens is honestly one of the first places you think of when you're going to go get that shot, right? And so their relevancy's up there. They got a CEO who just came over from being Starbucks COO, right? She used to be the CEO of Sam's Club, right? Which Sam's Club is owned by Walmart. And then she's also on the board of directors of the company we just spoke about, Amazon, right? So you want to talk about somebody that is networking with everybody you could possibly want to network with and has an extreme amount of experience in highly successful companies. And so she's coming in at a perfect time when this company's valuation's down, right? When I was buying the stock back in December, the forward P was like 8. It was ridiculous. Even today, it's at a 10.5. It's almost laughable, okay? And so the way I look at this stock is I look at this stock as the turnaround play that is going to be flush with cash now because they're just going to sell off their Alliance business, okay? So starting next year, we should start seeing, in my opinion, some nice kind of revenue kind of ramp up there. Because right now, obviously, with the Alliance business potentially leaving the business, that's going to be revenue leaving. However, it's going to flood cash into the business, so they're going to be able to turn more and more of their stores kind of into, I don't want to call it like doctor's offices because it's not really like a doctor's office, but kind of like even having an experience similar to like an urgent care or something like that, right? So where you can get, less super serious medical related things done, right? And so I look at this business, it's just in a really, really good place, a very, very profitable business model that I think is on the turnaround. And so if I'm going to have to guess, and by the way, it's a dividend beast. It pays like, depending upon where folks buy shares, it could be a 3%, 4% yield, if not over that, right? And so when I look at this company, I see a company that I believe, if we're going to fast forward 5 years in advance, one, it could be bought out. Remember that company we just talked about, Amazon? Could Amazon be interested in potentially buying WBA out at a 10 forward PE? And the new CEO of WBA is on Amazon's board of directors and has that relationship with Jeff Bezos. I'm not saying that, so that's just a possibility that maybe WBA gets bought out for $70, $80, $90 a share. But if I'm going to have to guess, and this is a standalone company in 5 years, WBA is probably anywhere from $75 a share to $125 a share, somewhere in there in 5 years from now. So yeah, WBA, I think it's an easy money stock, and that's why I put 7 figures in the stock in a matter of a month. I've never invested that much money. I never invested 7 figures into a stock in less than 30 days. Never did that, except with this stock. And I did that when it was like $40 a share. And it was just, obviously it's doing very well for us. And the dividends are nice. Let's just put it that way, okay? So yeah, that's the second stock of these 5 stocks that is an easy money stock. Let's get into the third stock of these 5 stocks that I feel is an easy money stock. And that is Facebook, the FB. I don't understand how anybody can try to say this is not one of the easiest money stocks out there, okay? In terms of risk reward, it's ridiculous. I mean, you're looking at the stock, it's at a forward P of 25. That is laughable, literally laughable for this company, okay? When you think about the type of growth this company has just as good a growth, if not better growth for the next 5 years that actually Amazon does, in my opinion, okay? And so when you're looking at it from that context, at a forward P of 25, it's rather ridiculous. They have one of the most profitable business models you will ever find. They've had to do a ton of spend for the business over the past few years to kind of get the business to a place where it doesn't take down the business, right? They were involved in some stuff and some things out there. And keep in mind, right, this is a company that is partnering better with, I would call it mainstream media and things like that, which is actually really, really important because here's the thing, right? Facebook was a threat to anybody that makes advertising dollars, okay? And so anytime anything negative around the FB came out, it got publicized everywhere. You know why? Because FB is taking these other companies' money, right? And so it's a very smart business decision for the FB to try to play good with everybody in the media space and try to help those companies thrive and do well and things like that, because at the end of the day, if they're more partnered with a lot of these companies, guess what? It's going to be harder and harder to attack the FB, okay, which is very, very important. So I look at this one, obviously the FB platform, right, as well as IG, as well as WhatsApp, as well as Oculus is taking off. That business is going right now, okay? The Oculus business, which is our virtual reality, augmented reality business, is absolutely going insane right now. And I don't see that slowing anytime soon. And don't be surprised if the FB is one of those players that ends up replacing our smartphones down the road, okay? That's just the wild card there. This is easy money stock, regardless if they ever do that. That's just a whole other vector of growth over time, okay? And you think about, like, if everybody has, let's say, Oculus headsets 5 years from now, right, which those headsets are amazing, right? They continue to get more and more advanced. Think about all the app-in purchases they could do in shopping and in ads you could see and all those things. Oh my gosh. I mean, that type of opportunity, that's a $1 trillion opportunity in itself, if not a multi-trillion dollar opportunity, right? And so this company's in a sweet spot. Cash loads to sky. I mean, we're talking tens and tens and tens and tens of billions of dollars of cash on their balance sheet with virtually no debt. I mean, you don't find a stock that is a more of an easy money stock than this, okay, at a 25 forward P. So as far as my price prediction for the FB stock, let's say 5 years from today, I would say the stock will probably be priced anywhere from $600 a share to probably $1,400 a share. The $1,400 a share is that they come out with some sort of device that kind of replaces our smartphones over the next 5 years, and that starts growing exponentially, okay? The, $600 to maybe $1,000 a share is that they don't come out with that device. They just continue to successfully expand Oculus, and obviously the FB platform, the ad spend just continues to go up, and IG, same exact thing. And as well as they're getting into so many things that people don't even think about around shopping and things like that. E-commerce, they have their site set there, right? Remember, we talked about Amazon earlier, right? Amazon is making more and more money from advertising, right? And the FB and Google, they love to make money from advertising. So the FB specifically, well, they're like, just about every single person on the face of the earth uses one of our products. Probably pretty good opportunity for us to sell things to them, right? E-commerce, right? So yeah, that one, you can't make a list of easy money stocks over the next 5 years and not include this stock. This is the one that is like, if I had to just feature one stock, it's this stock at the end of the day. So, yeah, that's the third one of these 5 stocks. Let's get into number 4 of these 5 easy money stocks, and that is Dropbox, ticker symbol DBX, okay? This stock's an easy money stock, in my opinion, for various reasons, okay? So one, it trades, once again, at a low forward P of 19. First off, stocks in this sort of space, cloud, e-signing of documents, and all these sorts of things, they're trading at ridiculous valuations for the most part. Dropbox is the one of that bunch that is trading silly low, like under a 24 P is. And keep in mind that don't be surprised if they beat numbers and they actually post much more profitability than a lot of folks expect. Okay, that's something very, very important that is likely going to happen. When I look at Dropbox, this is one of the stickiest business models you're going to find. If you're a small or mid-sized business, Especially if you're a small business, high probability to use Dropbox. They're getting in better and better with colleges, which I think is very, very key. If folks are, starting out their business journey, why not get in with business schools and offer discounted plans and things like that to get folks used to using Dropbox? Because when you get used to using a cloud service, a lot of times you don't want to switch. I'll be honest, I started using Dropbox for my real estate marketing business I used to have, right? And that business I started in, that was late, like 2015, right? And so ever since then, that's been my cloud company, and I love using their products. It's so simple, and if I needed to share anything cloud related, I know exactly what buttons to hit, and it's so simple. And I'm not interested in moving to any other cloud service because Dropbox, I just love the product, and they always make it better over time, right? So it's an extremely sticky business model, and likely they're going to have pricing advantage long term. It was a race to the bottom in cloud for a long time as everybody tried to grab their market share, right? That is starting to alleviate now. The market share battle is over, and now cloud is going to get more and more expensive over time, in my personal opinion. Kind of like Uber and Lyft, right? It was a battle to the bottom. They want to try to, take as much market share. Now, if you're noticing Uber and Lyft, what's happening with that pricing, right? So as the players get established and everybody kind of realizes where their market share is, guess what happens with pricing over time? Because there's not really a market share battle anymore, right? You see the same thing with smartphones, right? There's not really a market share battle. Apple knows what its market share is roughly in North America. And so Apple's not worried about trying to come out with their next iPhone and charge $200 for it. Maybe that would help their market share a little bit, but it's not going to help their market share that much. That battle's already been won. So why not make the profits, right? Same thing's going to happen in cloud, in my opinion, is already happening. And so Dropbox is going to just, the valuation's far too low. The growth is way too good. The business is way too sticky. So if I had to make a price prediction around Dropbox stock 5 years from today, I'm going to say that stock would probably be anywhere from $40 a share to potentially $100 a share. Really what it really comes down to is how much credit does Wall Street want to give over time to this business model? When is Wall Street going to admit that this business model is extremely sticky and that folks that use these products are staying around? When does Wall Street finally come to that realization and admit that, right? It will eventually happen, similar to how it finally happened with Apple, right? For the longest time, Wall Street didn't care about Apple's services revenue. And I'm like, do they not realize that business is going to continue to grow and Apple should be valued over time similar to a Procter & Gamble and Johnson & Johnson as far as its valuation went? Finally, Wall Street did that over the past year. Eventually, that type of move is going to happen with Dropbox. So when I look at the growth and the super low valuation and the stickiness of the business model, that's all I got to say about that one. That was the third stock of these 5 stocks up here. Let's get into the 4th stock up here, Corsair Gaming. Okay, Corsair Gaming. Actually, this is the 5th stock. Okay, and I know a lot of you guys are going to wonder why a certain stock is not on this list, as well as a few other stocks, and I'm going to explain that in just a moment. Corsair Gaming, next one up here of the easy money stocks, in my personal opinion. This is one in front of the gaming industry, streaming industry, okay, as well as getting into adjacent businesses. From a valuation standpoint, it's impossible to ignore. Unless you think literally Corsair Gaming is going to shrink their revenues over the next 5 years and their revenues are just going to go like this, outside of that scenario, it's impossible not to imagine this stock being an easy money stock over the next several years, right? Forward P of 16? 16? Yeah. I mean, I'm going to take a wild guess that gaming is a lot bigger in 5 years from now than it is today, and that streaming is a lot bigger in 5 years from now than it is today, okay? That's my big prediction, okay? Not a big prediction. I think anybody with a brain could say, yeah, that's probably pretty darn realistic, right? And so Corsair Gaming, obviously a huge player in those markets, as well as they continue to acquire companies and get into new growing spaces. And, the CEO, Andy Paul over there, he's done an amazing job growing this business over time. He continues to. He's got his eyes set on making this, I think, a $10 billion plus company in the future. I think this company's on its way to becoming that. They now are obviously a public company. They've gone public over the past year. And so they're going to be in a much better financial position to make moves out there in the market and buy out other companies. They're going to become a gaming giant. What Activision Blizzard, what ATVI represents in the gaming industry from a video game publishing type side, right? Because ATVI, they own some of the biggest games in the world, console games, and they're also huge in the mobile game world, right? Because they had that King Digital, acquisition many years ago. So they're just kind of like a gaming giant. Corsair is going to get to that place over the next 5 years, in my opinion, and especially over the next decade. They're going to become that company. It's just theirs is really going to be around hardware and software products out there, okay? And so I look at this company at this valuation. It's laughable, and needless to say, if I had to guess where is this stock in 5 years from today, I'm going to say between, assuming they don't split it as with all these stocks, I would say it's going to be between $60 and $150 a share. That would be my personal projection, somewhere between like a $6 billion market cap and a $15 billion market cap based upon the growth I see for this company. And like I said, a lot comes down to how much credit does Wall Street want to give for this business model over time when it comes to the profitability, okay? Now, let's talk about a few stocks that weren't mentioned here because I know some folks are going to ask about that. By the way, if you want to check out my private stock group in the private Discord chat and things like that, check out the pinned comment down there. I just put a video together this week kind of giving more detail around that. I know a lot of folks don't even know what is included in the private group or the private Discord chat or anything like that. So I put that together for you guys. TDCF. So TTCF is obviously the one folks are like, where's TDCF? I thought you believed as much in that one as any stock. I do, 100%. At the end of the day, when it comes to TTCF, here's how I feel. I've been talking about that stock a lot, so I didn't really want to mention that stock in this video because I've been talking about that one so much the past couple months. Second thing is TDCF is obviously a smaller company, right? $1 billion something market cap. So it does come with a little more risks than other business models, right? There's a lot of people short that stock. Who's to say, some short seller can't make some really bad decisions around doing some things to hurt TTCF, the actual company? I don't know. You never know. And so you got to, unfortunately, as bad as it sounds, we got to think about all these things, and we got to think about them all. Let's just put it that way, okay? And so that's why they didn't put something like a TDCF in there. An FB and Amazon, those type of stocks. It just doesn't matter whatever somebody tries to do out there. It's just those companies are going to continue to be growth beasts. When you're talking about $1 billion company, there's obviously a lot of things that could potentially go wrong, and things like that, right? So that's kind of why I don't mention a stock like that in this video. And there's other stocks out there that could have been featured in this video as well. It's just, at the end of the day, it's 5 stocks. So, but there's definitely plenty of those stocks out there. And something real important I just want to make as a point out there is, I know people love to try to focus around what could happen short term, stock market crash, stocks go down, blah, blah, blah. What's going to happen over the next 3-6 months, next year? Think about the next 5 years. That's what I always take it back to in stock market. It's the most important thing for you as an investor and for me as an investor. Think about the next 5 years. That puts you in a longer term mindset and you don't get caught up into all this short term crap that's going on. Whether Amazon falls from 3,200 to 2,800 or 2,600, in the short term, it really doesn't matter, especially if you believe that stock's going to be 6,000 plus in a few years from now, right? That's the way to kind of think about this so you don't get caught up in all this short-term stuff that's going on, and then you miss all these long-term gains because you got caught up in the short-term stuff, guys. So little stock market life lesson for you guys. Don't forget to smash that thumbs up button as always. I appreciate that in a huge way. Much love, guys, and peace. Subscribe!